Despite the slight rise in interest rates, the overall metrics and indicators we follow clearly demonstrate a robust and improving market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, June 2nd. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 24 homes, down from 25 last week. The average asking price of those homes was $2,479,000, which is up from last week's average of $2,392,000. 6 homes asking an average of $1,735,000 went pending this week. That is fewer homes than last week's number of 9, with a lower asking price from last week's $2,002,000. A total of 8 homes sold this week with an average sales price of $2,055,000. That average price is up from last week's average price of $1,965,000. And the total number of sold homes was lower than last week's 9. So now that we have analyzed the market's performance over the past week, let's dive into the broader trends that are providing insight into the health and the overall health of the market and the potential future direction of the market. But before we proceed, if you find this information valuable, we would love it if you would subscribe to our channel so you don't miss out on future updates. And why not share it with a friend too? Everyone deserves to be in the know about their local market. Okay, so let's take a closer look at those market indicators. This week, there was a slight decrease in the active inventory of houses. It's interesting to note that when we compare it to the same date as last year, our inventory is a staggering 58% lower. That is a substantial difference and one of the main factors contributing to our current seller's market. It's worth our mentioning that our inventory has been quite stable with minimal changes since late November. Normally, we would expect the inventory to start rising around early May, but that has not happened this year, and as we start the month of June, it doesn't look like the inventory will increase anytime soon. We'll definitely be keeping a close eye on this indicator to see if there's any upward trend in the near future. In addition to the decrease in active inventory, our turnover rate is also a clear indication that we are currently in a seller's market. The turnover rate is currently at 148% of normal, which is quite remarkable. To put it into perspective, on the same date last year, this indicator was rapidly declining and was only at 58% of normal. That means this market is moving almost 3 times faster today compared to last year. The turnover rate indicator entered positive territory in mid-March, briefly dropping below 100% of normal, and prior to February 1st of this year, the indicator was below 100 for the previous 9 months, indicating a slower market. These figures further emphasize the strong position of sellers in today's current market. At this point, I think it bears repeating. We're in a seller's market. Evident also by the amount the over asking price increasing by another $20,000 this week, reaching an average of $73,000 above the listing price. This represents a difference of just over 4%, which is twice the amount typically seen in a good market. The 7-day rolling average, surpassing $100,000 for the past 8 consecutive days, clearly indicates that the 30-day rolling average will continue to rise in the coming weeks. However, it is important to note that this is a lagging indicator reflecting the closing prices of homes that went into escrow between 30 to 60 days ago. As we've mentioned before, the market turnover rate remains the best leading indicator of the market's direction. This week, there was a small increase in the average home price using the 30-day rolling average, rising $3,000 to reach $1,907,000 on average. Over the past 4+ months, this average has been steadily increasing, aligning with the 3 indicators mentioned earlier. These 4 metrics collectively confirm that the market is moving in a positive and improving direction, solidifying its status as a strong seller's market. The correlation between the high-tech industry and our local real estate market has been evident for over a decade. While major employers like Chevron and AT&T have been reducing their staff size in San Ramon, it fortunately hasn't had a significant impact on the property values or sales. Instead, the city has seen an influx of high-tech workers attracted by the exceptional schools, a safe environment, and the beautiful setting of the valley. San Ramon boasts one of the highest concentrations of professional workers in the country, making it a sought-after location for professional families looking to raise their children. Keeping a close eye on the high-tech equities market is important as it can serve as a potential indicator of future challenges or an influx of families moving into our city. This week, the high-tech equities continued their winning streak, instilling confidence and contributing to increased sales from buyers coming from the South Bay area. And the sixth and final indicator we track is the only negative aspect amidst an otherwise positive market outlook. Mortgage rates have risen by 22 basis points to 6.79%, although they are lower than the last summer rates when they were over 7%. The consistent increase in mortgage rates remains the sole dampening factor on our market, which is why it's the only indicator below 50 this week. Overall, apart from the rise in interest rates this week, all the other metrics and indicators we monitor are indicating a strong and improving market. It's worth noting that the beginning of the summer traditionally brings a potential slowdown in the market. However, in our opinion, as long as the inventory remains tight and doesn't exceed 30 to 40 homes on the market simultaneously, we anticipate a continued strong market performance. Thank you so much for tuning in to our weekly market update. We hope this summary and commentary provided valuable insights into how our market impacts your options. If you have any specific questions about navigating the market to buy or sell a home, don't hesitate to drop a comment below or reach out to us directly. We're here to help you guide you every step of the way. And if you found this information helpful, share it with your friends and don't forget to hit the subscribe button so you'll always stay in the know about the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.